Chaos, chaos, chaos. Share of Chinese premium electric vehicle maker Nio went vertical in 2020, but recent weeks the stock has been declining like other stocks. But calm down guys, in this video we got the solution of this problem and how we can take advantage. Back to Nio, stocks don't go up in a straight line, and after a 45 times rally in 12 months, Nio stock was due for a breather. We're finally getting that breather thanks to a broader market fears about rising interest rates, which have sent Nio down more than 25% over the past month. Hey, what's up guys? Welcome to Investors Game. In this video we're gonna be talking about what's causing the plump with Nio stock, and if you guys wanna see any more investing tips, stocks, method, and strategy from me in the future, then be sure to subscribe down below. Turn on my post notifications so you never miss another upload. Now, let's jump right into the video. One of the reasons why Nio is declining is the rising rates fear that is spoken in the stock market, and specifically growth stocks like Nio is completely overblown. It will pass soon and without inflicting much more damage. Next, Nio stock is fundamentally undervalued at $50 relative to the company's long-term earnings growth potential in the global electric vehicle market. Next, the technical underlying Nio imply that shares have bottomed and are in the process of reversing course back in the long-term healthy uptrend. All in all, it's time to go ahead and buy the dip in Nio. Nio is China's most dominant premium EV market. With unrivaled technology and brand equity, Nio has tremendous long-term revenue and earnings growth potential. Since China is the world's largest auto market and the government there is aggressively supporting EV adoption. Thus, long-term China will turn into the world's largest EV market. Nio is right at the epicenter of the market, with a homegrown brand and industry-leading technology. But Nio is much more than a Chinese story. Outside of Tesla and maybe Lucid Motors, there are no other company in the world that can rival Nio in terms of battery technology. That means Nio can and will turn into a global company that by 2025 plus. After factoring in the global growth potential, it becomes clear that Nio is undervalued today. Let's not overthink this one. EVs are still taking over the world. China is still the world's largest auto market. With an aggressive agenda to support widespread EV adoption, Nio is still the most adept Chinese EV maker. The company is still on track to sell millions of EV over the next several years. Nothing about this truth has changed over the past few weeks. Recent updates from Nio have certainly been impressive. In early January, the company said it had delivered a total of 43,000 vehicles in 2020, that represent a year-on-year increase of 113%. In early February, the company also told investors it delivered 7,000 vehicles in January 2021, that represented a year-on-year increase of 352%. Turning to the valuation, Nio currently sports a market capitalization of about $90 billion. While that's a lot lower than Tesla with a market cap of $810 billion. Meanwhile, Tesla sold 499,000 cars last year. Nio sold 43,800 cars last year also. Looking at these numbers, I continue to believe there is some valuation risk here. If future performance is disappointing, Nio stock could fall. All this considered, Nio stock is a bit too risky for me right now. But why Nio and other stocks also are falling? Well, stocks like Tesla and Zoom are down 13%. Peloton is down for 26%, as well Nio is down by 25%. Also, there are stocks that are performing really well. For example, ExxonMobil is up by 36%, Airbnb is up by 31%, and Bitcoin, that is not a stock, is up by 102%. But what happened in the economy to see several stocks falling? Well, last year, due to the crash and damages to the economy, the Fed had to lower the discount rate. What it has to do discount rate with the economy? Well, when they lowered the discount rate, it was cheaper to get a loan because the interest and everything will be a lower cost. In other words, cheaper. But how lowering discount rate can affect the economy? Well, the benchmark 10-year Treasury yield has risen sharply in February. It has gained almost 50 basis points. That's a startling fast upswing in yields. And it's a troublesome for growth stock, because valuation are inversely correlation to Treasury yields. In theory, higher yields mean lower valuation. Bonds affect the stock market by competing with the stocks for investor dollars. Bonds are safer than stocks, but they offer a lower return. As a result, when bonds go up in value, stocks go down. But yields have overshot their fair value and will start to settle down in the coming months. The 10-year Treasury yield should finish 2021 at 2%. Since the Fed has promised not to move on rate hikes, We are at 1.4% today. That means yields are not going to rise much over the next few years. Yields will calm down, and soon, once they do, growth stocks like Nio will kick back into gear. Stocks do well when the economy is booming. When consumers are making more purchases, companies receiving higher earnings thanks to higher demand, and investors feel confident. One of the best ways to beat inflation is to sell bonds and buy stocks when the economy is doing well. When the economy is slow, consumers buy less, corporate profits fall, and stock prices decline. That's when investors prefer the regular investment payments guaranteed by bonds. And now let's check Nio stock. Alright, now that we got Nio's chart right here, we're gonna see weekly candles. So what we're gonna use supply and demand, and basically we're gonna draw zones where the price can bounce. It can be a buy or it can be a sell. In this case, we're trying to buy, so we're gonna look for demand zone. In this case, I can see a weekly demand zone right here. Now we can go a daily chart to see if we can get a smaller zone. So we go to a daily chart, and what we're gonna see here is that the market has been going down for at least like 60 days. So if we draw a trend line right here, we're gonna see that it's already broken. And the best zone that I will mark right here to buy, it will be this one. So right now, I wouldn't be buying or selling Nio right now because the price, as I can see, is like in a triangle, as you can see here. Like it's consolidating, it's in a range. So I would expect to operate the breakout. I wouldn't do nothing right now. And the moment that I'm really expecting is this one. So I will be buying between the $0.27, $0.36 per share until $25.30 per share. So this will be my stop loss and this will be my buy entry, and I will be buying this. I'm not a financial advisor and I'm not saying that you should do the same thing. You must do your own analysis. This is only for educational purpose. I'm not encouraging nobody to buy at this point to get returns. This is only my opinion. So for now, I wouldn't do nothing and I will expect the price to come back here and then I will buy. But before, I wouldn't do nothing. Alright guys, I think that's it. Thank you for watching this video. Let me know in the comment box, would you invest in Nio stock? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.